Hello everybody and welcome back to our special weekend edition of the markets around the world, including stock, commodities and cryptos. The Friday session was super interesting and pretty damn important. We ended up closing right around the maximum pain for options. We also created some gaps that are of interest for the week ahead, especially for the bulls. And we're going to put pressure on a level that if the bears manage to smash it through, could be a serious move, creating a lot of volatility. So stay tuned as we break down all the markets for the week ahead. See you soon. So welcome back everybody to the special weekend edition of the show. We'll start off here with just looking at a couple of headlines, and then we'll get into the macro and of course the actual charts and the key levels to be looking out for these markets. But we'll begin off with Tesla. So they're going to cut around potentially up to 10% of their salaried staff, according to Musk telling employees. And this is important in some ways. It's not so much that Tesla's doing it. Of course, it may not hurt production. There may be too many employees considering how they've grown. There's all sorts of reasons. But I do think that this is something that's going to happen in the next couple of months. So the jobs number that we've just seen come out of the US, which is quite strong, 390,000, obviously weaker than previous months, but still better than expectations, and an unemployment rate remaining at 3.6%. could turn at any point. In standard economics, you would expect it to be a lagging number. So as we saw small businesses starting to fire people in these numbers coming through, what we'll probably see in the future is medium, then large businesses starting to cut back on their hiring. So expect this to be the big number for the back end of 2022. I think we're going to watch job numbers even more importantly. But the market fell. And that's what has a lot of people interested. Why did it fall? Was it just manipulation? Well, the options expired almost in the perfect place for Wall Street to make maximum profit. So we'll talk about that later. But first off, let's have a look at what's going on in these markets right now in terms of under the hood. One of the things that's occurring is retail investors are using less calls. Well, this is no surprise. It's similar to what happened during the 2000-2001 period, of course, in the markets back then during the tech wreck. Basically, retail traders all came in. Options was the most popular during that point, only superseded now during the 2020 period. And we saw a huge increase of retail getting into these types of investments. Then they fall off. And the reason why is because most people trade options incorrectly. They buy calls at the money. They tend to not look really so much at creating premium over time, and they just get ripped up. And unfortunately, this is what's happening here. And you can see the buy calls really dropping back and losing a significant portion, 70% of their increase wiped off now in this number. Another thing that's occurring is that we've, of course, in a correction, but a lot of people are making a big deal out of it like it's totally different to anything we've ever seen before. Well, is it anything different to everything we've seen before? In some ways, yes. The speed at which the market sold off, the 7 weeks down in a row that we saw only ever happened 4 other times in history. But really, the length of time in days is still fairly consistent with other pullbacks. You'll notice here the 2022 so far, 137 days. Of course, the end date currently sitting at the 19th of May, which is when we bottomed. And the percentage fairly consistent with all of time. Remember, until we actually get into the 20%, we're not technically in a bear market, at least for the S&P 500, which is the most important index. So currently, it looks like if things will play out normally, we'd be a little bit over the median and we'd be a little bit over the average. So realistically, we're still in line for this to potentially be the bottom. Now, why would some people say it's the bottom? Well, things like these oscillators here point towards strength or breadth in the market of thrust. Whenever it goes from a negative number to a positive number can be quite strong. And you'll notice in the last 3 times over here that it's happened, it's marked the bottoming of the market. Now, it doesn't mean that's 100% accurate. And I would still say that the bears are going to come in certain places. And of course, during midterm years, don't bank on anything. There are usually declines at the end of the year that are bigger or go further than the current one we've seen. So yeah, this doesn't necessarily hold up or hold true just yet, but it is interesting facts. And of course, we'll need to see how it plays out overall. Fear and greed still sitting incredibly low at 27. So on the fear greed oscillator of all of the different indicators, fear is still ruling supreme, and that's consistent with what we've seen in the market. So let's talk about the Friday session. What happened? Well, it gave up I would say like 90% of, or 80 to 90% of what it put on in the previous session. Now, was this just pure Wall Street manipulation or the composite man manipulation? It could well be. And when we look at the charts, I think that will make a lot of sense to you. Apple was down 3.86%, but something happened on Apple and both Tesla that's technically important. They both filled the gaps. Now, of course, Tesla was down figuratively on, let's call it, Elon Musk saying he's going to cut 10% of staff. But if you actually look deeper into it, it may not be as bad as anyone expects. And of course, this is why the news and the way articles are written in some ways are a little bit dodgy. What happened though? Gap fills. Very important. Let's have a look at the session overall. The session came in and it actually gapped down. So you'll notice here they all opened up around 0.8 to 1% down, and then it fell further and further and further, wiping off most of it. It stabilized just after the retail hour of power, which is from the open to the first 10:30 over here, New York time. And then we basically just sat around, had a little rally through the lunch period, and then came back down to settle. So is this something to be of concern? Well, the good news for bulls is there's a gap above now that could be filled. The good news also for bulls is that Tesla and Apple and other large stocks filled some of the zones that they'd left open. So that's certainly important. What sectors were doing well for the day though? Well, it was all about energy, 1.32% up. And other than that, anything that had been up in the previous session, clean energy, consumer discretionary, and semiconductors fell. So really it was risk off for the session after quite a few great risk on days. You know, it's been a very strong risk on period for the last 2 weeks, and this was a breather in between that. We'll take a look at it. What was going on with the VIX though? Was the VIX jumping up? Not really. The VIX actually fell, and this is because it didn't really get outside of a big range. The market didn't freak out, and volatility in general dropped. So now that we're underneath 25, is this also another good bullish sign for now for the week ahead? It certainly could be, because when we hit underneath 25 previously, we've tended to run back down to around that 20 zone. Now, if that's going to occur again before the bears get back involved in the markets, it points towards bullish action or potentially whatever the trend is currently holding true. And we'll take a look at those key levels very soon. They're super important levels. PCC, put call ratio, jumps a whole bunch of extra puts coming back into the market. Again, figuratively a positive thing for bulls. And the reason why is because if there's more puts in the market, then the market can also turn around. And it means that the market is basically sucked everybody into a concept, and then it goes in the opposite direction. Notice at the start of the week, one thing that was very worrying was how many calls were opened. And I think that's why Wall Street wanted to expire worthless. Get rid of those calls, expire them worthless, create max pain, which they did exceptionally, and then move on to the next level. US 10-year dropped a little bit, but still was significantly up over the last week. It's really rallied up. Some of the leads that I was talking about over here that were pointing towards the US 10-year dropping and consistently dropping, unfortunately have not continued to follow through. So I thought I'd update you here that some of the things like we've been talking about where we were correct from this level up here haven't continued to follow just yet. So US 10-year, while I still think it could turn around here, the other lead indicators are not pointing towards that anymore that I do use. And that's unfortunate, but we're still down from where we were when we made that call, which is good. And I'm just warning you right now. Dollar index, what happened here? Well, it sat around. Didn't really do too much. You'd think it would have run a lot more considering the non-farms number. It tried to boost up. It did so through most of the session, and then it fell, and then it came back and did all of those types of things. Look, we still have a huge resistance at 103. We're looking towards that, potentially where the market turns around. And at this stage, it's kind of in nowhere land. If you're feeling bullish on it, I wouldn't blame you on the DXY, but yeah, it's not very clear. What happened to gold? Well, gold made a new peak. So it made a new higher high, and then it dropped. And it dropped back into a very cool zone. Check this out. So we've got here the previous trend line down that goes through that level, and now we're sitting around this area. If we get a turnaround story right here, that is, it starts to go bullish, this could be very, very positive towards, of course, the market, and especially gold. So if we get something like this, that would be a fantastic first time frame change, and I would be quite excited for the prospects for gold for the week. So definitely stick with us, subscribe, smash that like button if you're enjoying today's video, and we'll be covering gold in a lot more detail through the week. So it's on support, but we want to see a turnaround story still from that. US oil broke out to a new peak over here, which is positive. Maybe you guys will get your 126 wishes. You know that I'm not heavily bullish or bearish on oil right now, but certainly the US 10-year continuing to rise is strong for oil, so that's good. And because some of those other leads have switched ground, you can't necessarily be as negative on oil until that happens. US 10-year drops, be worried about oil, guys, that's for sure. And if that continues to happen for a while, the more that happens and the more they diverge, the more sure oil will come down. At this point, that hasn't happened. Let's talk about gap fills, because this is where Tesla came in. Look at this gap fill, perfect. It's actually what you kind of want when you're talking about a nice rally. We've had gaps, they've filled. Now where's the gap? Well, funnily enough, it's to the upside. Nice big gap left here. And we've also got a gap over on this left-hand side. So could we be setting up for an inverse head and shoulders? We certainly could be. This is the left shoulder, this is the head, this is the right shoulder. What if the markets hold this zone, which it is on support? Don't worry, that Tesla's technically sitting on support here. What if we hold this zone and rally through, filling the gap through the Monday, Tuesday session on the markets? Well, there is a case to be said for that in most of these. And let's actually take what an inverse head and shoulders would look like. So you take generally the head to the neckline, you work that out, and you say, does it proof? See how it proofs up to here? That would be cool. So yeah, I don't mind Tesla if we get the rally, and the S&P 500 will tell us that, I believe, in the sessions. If we see those right moves. Apple, another one, filling the gap. Fantastic. Creating an inverse head and shoulders, certainly possible. Remember, we're playing 3D chess with the market right now. We're trying to figure out what is possible. Then if it triggers, you know what to do. And that's really what the plan is. Of course, it would be projecting into this zone. You can see really the distance of A would equal B. Again, if markets proof things, I like that. And if we get the triggers, could be positive here. So Apple, another one showing that it's filling that gap and getting rid of that inefficiency, I guess you could call it. XLY, XLP. This is the way that we see risk on and risk off in the markets. It held pretty well. It's been really calling for risk on for the last couple of trade sessions. In fact, about a week and a bit. And yes, okay, the Friday session wasn't risk on, but in general, you can really see the risk on parameters coming through, and there's still a little bit to go. So hopefully we get the turnaround in the week ahead. Continue to put this on your chart, look for risk on, risk off, and that will help you in your selection of potentially some stocks out there. Let's check out the DAX. What's going on there? Well, the German market held amazingly well, only down 0.79 on the session, and still very strong. We saw this breakout. It was one of our leads that we went with the rest of the market. We've still got that inverse head and shoulders in play here, and it's still calling for a bit more of a bull run. So there's no reason to say that the bears are in full control yet. We've still got a series of higher highs and higher lows or higher troughs. And until that sequence is broken, how can you really say that this market has turned to the negative side? Well, you guess you really can't. Let's look at IWM, similar thing. It's kind of in our red zone. We'd like it to go back to this 193 ideally, and then that's maybe where the sellers come back in. So IWM, surprisingly strong. Check this daily out. Look at that little doji created. So a lot of equilibrium in the hypergrowth or the smaller cap stocks, again showing risk on in the markets, has been present. And this could be leading that sentiment attitude. What really happened here was big stocks got dumped. They got dumped into gap fills. Small stocks held comparatively well. And while they still dropped a decent amount, some didn't drop much at all. Enphase only dropped 1.3% after a great day. Biotech picked up throughout the Friday session. So again, some of the hypers, they did amazingly well considering. Let's move over to the Nasdaq, which of course is one of the major indices, and we can look at this and then we can say, okay, well, have we filled everything we need to? So the Nasdaq has some problems on it. We still have technically a gap here, but we most importantly have created a new peak over here. So we get this as our new higher trough. This area is a very important area for bulls and bears this week. There is something sitting behind here, but in general, we are looking at this being the demand. And that means that we really need this level to hold up if you're going to remain being bullish in this current market. If you're feeling bearish and you see it smash through here, and of course, once it gets through that, That's very negative towards these markets. These two levels here, very important, but that's what the Nasdaq's doing. And if we move over here just to understand the price action, you can see the equilibrium here. These dojis are kind of showing that the orders are finding an equilibrium. There's clearly something sitting here in terms of orders and a fight between effectively the bulls and the bears. And if we breach underneath, it's a big deal. Back down here we go, fill that gap. And then after that, you know, it really could be just all on for the bears and they're taking command of this level. The gap sits here though. So all of this is futures market. So there's a good chance that we need to go fill this before even considering coming back down. So imagine if the Monday session went like this and then it sold on Tuesday, turnaround Tuesday, or it made a new peak going towards our next levels. These are both very, very possible. And I think you've got to keep an open mind to both scenarios because that's what traders have to do. Gap fill would be over here as well. So if we did end up getting a new high, next level would be that 13,500 zone. And it does still look positive on the charts. And a lot of you will say, well, Tom, what about the double top that could be here when we breach through? Well, that's the whole reason so many of these things remain important around this demand area. If it cannot hold, bad things could come for this market and bears really could start to get in control and start shorting it off. S&P 500 is the same. We got a new peak being formed. We've got a huge gap sitting here. We've got a good demand zone, which was previously a demand zone, and of course, turned into supply. So this is a huge level. We've been talking about the 40-80 in this area for a little while now. We've filled the gap. We moved down. Do we go back for this one and then move up to the 42.90? That's what we're hoping for. And there's no reason just yet to say that you're bearish in this market. You know, if you're looking at this, how can you say you're bearish just yet in terms of these timeframes? We're still making higher peaks and higher troughs. Until the sequence is broken, it's very difficult with price or even order flow to say, okay, this is negative. And the main reason why all of this is very possible is because of the max pain. But we'll just have a quick look here at the Friday session. There's the Friday session. You'll notice it came down and hovered and just basically floated above that area. So floating around that 4,100. Now 4,100 just so happened to be maximum pain for options. So it closed slightly above there, but this was a pretty amazing movement for the market to get maximum extraction out of the options that were written by the street. And effectively the composite man won again on options. And this is why you're seeing so many people get out of bought calls, because they're losing. Why are they losing? Because bought calls aren't easy unless you know what you're doing and you've got a lot. You're basically like a pig. You know the direction and you're very confident in that direction. Buying weekly calls, buying 2-week calls, you get destroyed, especially at the money. And for anyone that's done it, put your comments down below. Let the community know whether that was a bad strategy for you or whether it's been successful. It looked like it was successful in 2021 because of the aggressive moves. But when the moves slow down and they don't go directly in your direction, it's not so easy just to say buy, 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 buy. You tend to get slaughtered. So 410, maximum pain did occur. Let's have a look for the week ahead here. We'll check out the 10th, which I believe is the expiry. Let's just quickly check that out. Yep. And there it sits at 405. But the most important one is the 17th. So the 17th still sits at 423. So that's basically showing that if all things remain equal and the market goes up, the market is still wanting to push towards this level here. And that's that 430 zone, that resistance, that supply area that we talked about. Still a lot of open interest puts sitting in this market, ultimately holding it up for the month of June at that 400 plus. That's why it's hard to be so bearish at the moment while all of these still exist. Continue to check this out and continue to watch it. Let's move over to Bitcoin. Bitcoin shorts increasing slightly. And what that's meant is Bitcoin has also dropped off. We've been correct as a community so far. I mean, there's no reason to say that we've been wrong here. We called the 32,000 as a community, so well done to you guys. You did well there. 32,000 supply, certainly a big level. It sold directly off that. And we're sitting in, you know, I guess you would say a good consolidation zone. I'd like to see 32,000 broken before you can really say, oh yes, we're out of this horrible, whatever you want to call it, distribution or accumulation cycle. And if you're thinking about it in the weekend, really what you need is you need to breach through here, push towards the 32. That would be a nice little double bottom into the 32. And then if it breaches 32, it most likely will pull back maybe to a 30,500, and then we rally upwards and onwards. But until Bitcoin moves, the rest of the coin market, that is the alts, has no chance. And that's why you must look at this chart the most. If you haven't already, come and follow us over on Twitter or join our public or private Discord community. Links in the description down below. We've got thousands and thousands of you in the public community sharing ideas. And of course, we had a great hangout session during non-farms for the private community, so you can definitely come and check that out. So what's in store for the week ahead in terms of the markets? Well, we have a few things, but not too much. If we scroll down, you'll notice there's a bit of red news for mostly other countries. And then on Friday, we have the core CPI number coming out for the US. So this is an interesting week because while we have the ECB press conference, while we have other countries and other places having fairly big announcements, the US, which is the one that we're mostly focused on here, isn't really showing too much stuff. So just remember, it's going to be incredibly important that we understand that markets around the world are going to be allowed to, in general, make their own decisions, and therefore price action should remain king. And we're going to find out whether the bulls or the bears are in control. Thanks so much for watching. Of course, smash that like button if you could, and give us a subscribe if you enjoyed the video. We'll see you next week, and we've got a big video coming as well on Monday, Sunday in America, which will be around one of my favorite topics. So I thought we'd start releasing these, and hopefully you enjoy it. Remember to vote in the poll. We'll put it out soon. Bye for now.